Welcome to another episode of CFM, Commercial Financing Mastery. I've got founder Sua Truong here, who's going to be talking about some very hot topics today, especially with all the buzz and the talk about the new Fed chair FOMC meeting with Kevin Warsh, and also in Canada, the Bank of Canada just a few days ago with, Tiff Macklem, who came out and was talking about the rates and what's happening and all how the mass media is, fear mongering. Sua has a very contrarian take on this. In fact, we have a gift for you. Stick on all the way to the end of the video to find out what gift that is. We have a white paper with a lot of details in it that you can take the time to read and be educated and be on the right side of the lending so that you can also apply and learn the skills. All right, so let's dive into this, Sua. Yeah, I mean, the big news, we got Kevin Warsh coming out, talking about rates, and, people are worried about the dots, and people are worried about, are they going to be a rate hike at the end of the year? Did you see at 11 a.m. Pacific time, silver and gold dumped just based on the news, even before the presser? Now, I know everyone, you might be reading this, you might watch the news, you may have seen it on Twitter, read something on LinkedIn articles. So what's your take on this? I mean, how does this really affect commercial financing? How does this really affect residential? Does it really affect residential? I don't know. What's your take on all of this?
Well, since everybody's making such a big deal for it, I spent invested some time as I made some presentation slide share. I can share it to you. Maybe you can have a chance to see some visual rather than just me and you talking points, like talking
Sure.
heads.
Yep.
I mean, honestly, at the end of the day, is indirectly we're affected, but I think directly it's more impacting on the residential market than it is on the commercial side.
Right.
And where the current market is heading is instability. Because I mean, if they know, if Walsh knew what was going on, and not giving his take on it, that says something. But if he's also not saying it, that also says something,
Mm-hmm.
right? What does it say? Maybe he knows. Maybe he just doesn't want to say it so that they can take profit sharing. I don't know, profit taking. But I think that in the residential market, we are so impacted because the interest rate, first of all, where the heck is the next slide? The interest rate, like you're saying, we have two central banks, one in Canada, one in the
Right.
US. The
Yep.
US has a bigger movement, and it's a hike bias, meaning that they know they're going to make money. I mean, having a low interest rate in Canada, that's not very profitable for commercial lenders. That's like giving money away at 2.25, right? And and for the US, they're increasing it eventually.
Mm-hmm.
They know that they have to, but because why? Well, the GDP
39
is much.
trillion and like
Yeah,
got
yeah,
the
I mean,
debt.
yeah. But they're forced to. Like same in Canada, we have so much debt that they have to artificially keep it low,
Correct.
artificially,
Yeah.
right? But I honestly believe when the interest rate in Canada was at 3.75 or roughly just sub 4%, that's where the
Yep.
money needs to be to make money, to make profit in commercial capital.
Right.
That being said, if the economy is not moving, they don't have a choice. They don't have an option right now, right? As you know,
Yep.
right? You're more familiar with this than and you keep updated of this more because you're affected because you're
I'm
in
I'm in the
stocks.
markets. I'm in the stocks. I'm
Yeah.
gold, silver, liquid assets. Yep. Bitcoin, other areas as well. Right. I've always been a big proponent on the liquid assets. Right. And then so like now let's take it and reflect it on the residential, on real estate, and then even commercial. Right. And where really the money and the capital needs to flow and be deployed to. So
Yeah, just give me a second here. I'm gonna put the slide so I can see better here. I
yeah.
stuff it's harder to move it around
Yeah.
on the screen
So
here
while
when
Sue is doing
on the
that, by the way,
laptop.
type in the comments below what was your take. If you're watching this video right now and you haven't subscribed, put your comments below in our comments and let us know what's been your take on what would let me see my camera here. What was your take on the Fed and the announcements, right? Like did you feel that it actually makes a difference in your life if you're a residential mortgage broker or maybe you're a CPA, maybe you're a financial professional? Hearing all that news, how does that affect you in your day to day? And and you're gonna see what Sua is gonna come up with for his take on everything. Okay, so go ahead, Sua.
I mean, for honestly, here it's the next step. We'll give you an idea. I mean, for one thing,
Mm-hmm.
the residential market, the banks are tightening. We all know this. In Canada, US, it's the same. It's identical play. The Canadian market, they're making loan to value much harder on conventional deals, on residential, especially residential. They're trying to calm the market down. They're trying to push the valuations down.
Yep.
So because why? People complain that we can't afford it, right?
Yep.
In all the major city, like
Yep.
in Toronto and
Vancouver, Toronto.
Vancouver,
Yep.
yeah, it is way too high. People can't afford it. I mean, you got due income, you got lawyers, you got a medical professional, combined income. They still can't afford a house.
Yep.
That doesn't make sense, right? So I remember decades ago when I first got my first house, a couple of decades ago, I was single income, working at one bank as a personal, a small business banker, and I can afford a house.
Yep.
Today, wow, right? So banks are tightening, which means that the money supply is being reduced on the not reduced, but the intake, the buyers, the borrowers are being constricted because it's higher qualification. So that means the money is sitting there and saying, hey, we need to deploy this capital. What's going on? Right? On the commercial side, they're saying, well, we'll take it.
Yep.
Right? Um, and then the renewals, I think a third of, and the US is probably not much different, right? Canadian US is like a third of all Canadian mortgages renew in the next few years.
Yep.
Way higher interest rates than
Correct.
than 3-5 years ago. Way
Right.
higher, like
And there's all
double
that all the
almost.
talk about, people not being able, like they're defaulting on their mortgages and things like that, right?
Yep,
So
yep.
that's typical. That's again
That was
more fear
never
mongering. Yeah.
that was never a thing, right?
Mhm.
In Canada, because we're such a very conservative lender, a conservative financing industry.
Yep.
But it's happening. It's
Yep.
happening, right? It's unraveling.
So banks are tightening,
However,
right? The
yeah,
renewal is hitting.
banks, yeah, banks are tightening. However, if you are in a corporate world
Yep.
and you have to answer the shareholders,
Hmm.
shareholders saying, "Hey, Scrooge McDuck is not sitting that money inside the bank vault and it's going to multiply." Okay, it
Yep.
doesn't work that way. Right?
Yep.
They're not livestock, right?
Yep.
So the money needs to be deployed. So when they look at it, and say, "Well, the residential market is dead.
Yep.
We've got all this money. Here's $1 trillion, Sua. Go and get your investors buy commercial property. We'll lend it because
Yep.
it's sitting here doing nothing." And our shareholders are strangling us, saying,
Yep.
"Hey, we need to see profit. We need to
I,
see
I'm
that
I'm I'm
record
one of those
profit."
shareholders, right? As you know, I hold dividend paying stocks and I hold all the stocks in all the major banks that they never lower their yield. They never they're not lowering the
Well,
dividend.
exactly. So
Yeah.
the money
Yep.
has to go somewhere, right? So just like you follow the money.
Yep.
So the money flow, where is it going?
Hmm.
On the residential side, people are stuck because, well, you got a house, you can't afford. You got a condo, the market's like pummeled. It's tumbling. Like there are some market you've seen in some Toronto, especially. I saw
Yep.
one person pre-sale like 3 years ago. They
Hmm.
put a property on for market that they bought from the market. Like say, let's say $1 million, just
Yep.
round number. Like it's not a million, but it's saying it was $1 million 3 years ago when you pre-sold, when you bought it originally before the
Yeah.
construction. Now it's finished. The appraiser come back and say, Sua, Desmond, sorry, the value is now 600. And you're
What?
going,
3 million down
the
to 600?
lenders, $1 million down to 600. So the lender's
Oh my
saying, we
god.
only lend based on the 600.
Yep. That's right.
So
Where are you gonna come up with the
Desmond, as a
rest?
buyer, you're going to come up with 400K. Where the hell are you going to come up with 400K?
Yep. Yep.
That's just mind blowing. So a lot of people walking away, and it's having tumbling effect.
Yep.
So as a builder developer, you're stuck with that. You're stuck with that development. You got to finish. You got to pay off that loan, construction
Yep.
loan, right? Now you got to buy time. So that's where the money is going. I mean, the expensive money right now is not killing the deal. Is actually committing to these deals because they say we need it,
Yep.
right? And if you got the right lender with a lot of money sitting there, maybe a bridge financing will help, right?
Right.
That's where it have to be. Maybe they have to have a creative solution by getting some
Vendor take
vendor
back.
financing.
Yep.
Yeah, like the builder developers maybe have to do some kind of creative finance within the operating business as a development company, offer financing for the next 2 years to
Yep.
the stopgap to bring that 400K that they need, right?
Yep.
So that's how it has to work. I don't see it being able to push harder. It doesn't work that way in the residential side, right?
Hmm.
You can't force the bank. The bank
Right.
says that's it. The shareholder like Desmond say we're not financing 80-90%. Are you crazy? We finance at current market value, not what they bought it a couple of years ago. We don't
Correct.
care,
Yep.
right? So there's a lot of that money now also sitting. So where that's moving that I see is
Mhm.
it's opening up a lot easier.
Yep.
The lenders are more receptive to commercial side because now
Yep.
there's, hey, we have the ability to pay. Our operating business is producing money, but we want to build an office. We want to build a, a sublet it. Maybe we have a
Yep.
upstairs mezzanine. So
Right.
now the the treasuries open up the purse and saying, hey, we need to deploy that capital.
Yep.
Desmond, the shareholder, is saying, hey, where's my money? Where's my
Right.
profit?
Yeah, and especially infrastructure as well too, right? Because of, all the
Infrastructure is a big thing right now.
huge.
Yeah, and the
Yeah.
government mentioned about that. And when he mentioned AI as an American, what the
Yeah.
heck is that?
Yeah, you were saying it was it American ingenuity. Yeah.
Ingenuity, yeah.
Yeah.
American
AI.
ingenuity is like,
Yeah.
that's not AI.
But it's about yeah, productivity, right? I mean, look at all the
Yeah.
infrastructure, like even just for the power sources, everything, like everything needs to get
Everything.
upgraded.
I mean,
Yep.
I was telling a lot of my colleagues that we're able to finance a lot more small business owner entrepreneurs
Yes.
expanding their business, like HVAC, plumbers, electrician. We're talking about
Correct.
tradespeople. That used
Equipment,
to be
yeah.
like, hey, yeah, that used to be like hard pushback from the lender saying, well, their job it's unstable. The tradespeople,
Yeah.
they
They kind of
have a
look
lot
down
of
a bit, yeah.
yeah, they look down on those people. Now it's like pushed up. They're like, we can finance them just like doctors now. It's like,
Yeah. Oh, yeah. That's
seriously?
right. You got moved up, like electricians, HVAC, plumbers, all got moved up, like
Yeah,
doctors
it
now.
got moved up to doctor level now.
Yeah.
Before they used to be like taxi driver. That's
Yeah.
what they treat them like. It's like, oh my goodness. The world's coming around, and I think it's a good thing. So
Yeah.
I think the smart money
Hmm.
is moving
With the yield. Yeah.
where they're getting paid, where the profit is,
Yeah.
right? Where the yields go, they move
Hmm.
there, they shift there. It's
Yeah.
like, why am I setting for 2, 3%, 4%, sub poor 4% on the residential side when 5 to 6% or 7% on the commercial side?
Yeah. That's true.
Let's
True.
reallocate it,
Yeah.
right? Reallocate that money. So as a lender, the profit's gonna move,
Hmm. So
right?
like
In the
for the capital providers, they got to move the money.
Yep,
What about for the
yep.
brokers? For the brokers,
The
like
broker on the
yeah.
residential side, they're gonna
Mhm.
get tanked because commission's gonna get tanked.
Yeah.
The amount of money that's getting lent out is constricted, meaning that they're making it more difficult for the buyer to qualify,
Yeah.
right? In TDI in the United States, TDS, GDS in Canada, it's
Yeah.
the same thing. It's just the measurement is being constricted because they want to make it harder to lend out
Yeah.
that money so that they can push the residential valuation down further.
Yep. And I
It's
mean, if
sketch.
you're in residential, whether you're in the US or in Canada, tell us if
Yeah.
it's true or not true. Like type in the chat, like, are you getting your commission squeezed, right? Are the banks undercutting you, right? And actually going straight to your clients as well too, instead of
Yep.
cutting you out of the deal, right? So let us know in the
Yep.
comments. And then what about for the investors?
Yep.
So for the investors, when smart money is on the yield, moving towards the yield, like, so what about for the investors? The private,
Investors are happy to lend, and
yeah,
investors are actually like joint venture partners, especially.
yep,
I find a lot of people are more open to commercial property, commercial real estate now than they used to be because
mhm,
they're looking and say, well, if I invested in commercial property, it's still stable. The
yeah,
market's still stable because the sophisticated investors know that the valuation of commercial property is not dependent on real estate. No, it's not dependent on emotional factors. It's all logical factors. Like
right,
the only way that real estate is worth its money is based on the income it produces, the rent roll,
correct,
right?
yeah,
And the commercial side, we have 5 year, 10 year rents,
yeah,
leases. The,
mhm,
the commercial leases are very long term.
right,
They know
yeah,
exactly what that property is going to be worth in 5 years to
yeah,
the dollar,
yeah. And
right?
when they
So
renew another 10
investors,
years, it's like total
yeah.
20 years, right? Yep,
So investors have a longer term than short term.
yep,
Residential buy has a short term plan, right? Goal.
yep,
Whereas investors, I want my money to grow for my retirement in 10, 15 years. What
yep,
does it look like?
yep.
This is what it looks like,
Hmm.
right? So that's where the smart money's going. And
Yeah. So on the case for, like, we got like if it is for positive, and also what is it on the other side. So let's talk about each side. The case for, right, where right now, what's the positive side of things?
yeah, the positive side is more money is being available. All right, more money is being made available. They're taking more risk on the
Yeah.
commercial side. They're looking at more creative projects,
Yeah.
such as conversion from office to uh, assisted living, office to maybe even residential conversion.
Hmm.
They're even looking at hotel, motel conversions into a retirement home, retirement facility, which in the past is like no, right? There's such a
Yep.
big type, different type of zoning for that, right?
Yep.
And and it's diversifying for a lot of the lenders rather than because remember in every real estate market, 7 to 12 years, it goes like residential, it goes up, and then it goes down.
Down.
Correction,
Yep.
right?
Yep.
Yeah.
We go through
So
those cycles. Yep.
every lender, doesn't matter if it's RBC in Canada or Wells Fargo or Bank of America US, is that a lot of their portfolio is residential, like
Hmm.
heavily, right?
Yep.
Tilted to residential. Now they're saying we need to rebalance this so that our book is not going to go tank when the whole entire economy tanks, right?
Yeah.
Everybody's declaring bankruptcy
Yeah.
and foreclosures. It's like it doesn't help them. They're not in the business to sell houses. Remember,
Yep.
banks are in the business to make money,
Yep.
right? So foreclosing on people is not good. So on the good side is a lot of smart money is moving into commercial,
Yep.
and that requires another level of expertise. And
Correct.
CPAs, for example, correct?
Fractional
We're
CFOs.
talking
Yep.
about
CPAs.
fractional
Yep.
CFOs, and all these people are like coming out of the woodworks. Their value is
Hmm.
increasing because we need them.
Correct.
We
Yep.
need we need them to help us to get the
Yep.
loan with the commercial lender because they need proof, they need man numbers, they need
Yep.
spreadsheets,
Yep. They
right?
need notice
So
readers. They need the actually
yeah,
officially prepared documents,
they
right? That
need they
that prove
need
the cash
paper
flow.
proof.
Yep.
They need paper proof because I need to answer to my vice president, to my treasury, why I
Correct.
lent out $50 million to these people,
Correct.
to
And they
this
need
group.
they need CPAs and fractional CFOs to sign off on it properly so that
That's
they
right.
actually would accept it, right?
Yeah,
So
yeah.
yeah. Okay.
So on the bad side, there's always
Yep.
a good and a bad. On the
Hmm.
bad side is that the money will eventually get reallocated, and the risk
Yep.
tolerance will be reallocated. So who knows when the money supply is going to end? Right now, the going is good because there's a high profit margin for the business is still growing, and because we know infrastructure demand, AI, everything's pushing towards commercial, right?
Yep. Yep.
And working from home
Yep.
kind of kills one market. So not all market is benefiting. So the
Yeah.
caution is that you need to be careful if you
Yeah.
invest in commercial for the first time. Get professionals, get people who are in the industry long term like us. We've been around for decades, so we know, and we know which sector is doing well, which sector isn't, right?
Correct. Yep.
Of if the cheapest thing to buy right now is office building because its vacancy is so high that everybody's working from home on Zoom, on Google Meet, you know what I mean?
Yep.
Right? So there's a low demand for office building because people are not going there anymore as much, right? But if there's an opportunity though for the right person, for the right city, right location,
Yep.
with the right lender, convert the damn building, right? So
Correct.
there's still the
Yeah.
opportunity,
Like of
but the
course
risk
right
is
now we look in states like Texas, right? And also Florida,
big
right?
time. Yeah,
And in Canada there's also different mining sectors, there's other sectors that's happening right now, right?
yeah,
Even
yeah.
Saskatchewan, many people they only focus on like Ontario or like British Columbia, but it's other sectors as well too that are thriving right now, right? So it's not always
Yeah,
just the
so
office buildings that's commercial, right?
no. There's many types of commercial real estate
Yeah.
niches that you can go into: warehousing,
Yeah.
last minute, transportation,
Yeah.
infrastructure is just a small part. Heck, even export. The export market is going crazy. You
Yeah.
know, how does that affect Canada, U.S.? It's great because right now, if we export to the we export from the U.S.
Hmm.
to Canada. I don't know why the Americans don't want to export because we get the money is like the spread is much significantly higher, right? We're getting
Yeah.
way more money now than it used to be.
Yeah.
So there's a market for that, as well as vice versa. When my investor looks at it and say, well, so I have to pay 30% more to get American money, but I was like, yeah, but you're getting 6, 7, 8% cap rate in US, whereas you're getting 1 to 3 in Canada.
Hmm.
You want 1 to 3% based on Canadian money, you want 7, 8% based on US dollar.
That's right. Yeah. Yeah, exactly. Like in Texas, we see like a lot of 7% cap rates
Right?
and stuff, right? Yeah.
Yeah.
So
So that's why, and why what the message for us is yes, Walsh is saying There's no movement. There's
Hmm.
nothing going on.
Yep.
But that means what? That means stability.
Hmm.
That
Yeah.
means still like commercial side, there's stability. So what's the long-term play on stability? Commercial loves it.
Yep.
It means that the market's not going crazy anymore. It means that I better buy now because when everybody starts to realize that, hey, the risk is low now, we
Yep.
should invest in the commercial, we should open the business now.
Is going to
It's too
drive.
late for you.
Yeah. It's already too
Yeah,
late.
it's too late,
Yeah. So
right?
how does this pertain to
So
like the residential brokers? All the news, summing up the residential news, and then we're gonna also, by the way, guys, stick on all the way today. I'm gonna give you a screen share and show you what the white paper we're gonna give you as well to the gift, right? So,
oh,
yeah,
you're gonna love it. You're gonna love it. Like it'll give
yeah,
you insight in how you can monetize and what the knowledge that you get, rather than just watching the news and make nothing of it. Right?
right.
Waste your time. We spend time looking at the news so that you can benefit from it. Right? On the residential side, that I can see is that look, right now is not the best time to push, to try harder, to work harder. Right?
Hmm.
In residential side, I just say don't quit your residential. You still need the license to do commercial deals. If it's like follow where the money is, guys. The money is going to commercial. Go where the money's flowing.
Yeah,
Temporary, maybe you might enjoy, maybe you might like it, you might make a full time out of it. Because I've seen some of my graduates who have spent 15, 20 years in residential
yeah,
completely convert their business to commercial because they don't
hmm,
want to go through this anymore,
right.
right? They want more stability. They've been around a long time. If you've been around a long time, you've had 3, 5 years. Maybe it's time to really leverage your relationship that you have with your current database, current client, current community, right? Network
Yep,
you have, right?
yep,
Include other people, other business people, like CFA, CPA,
yes,
CFOs, all the fractional CFOs.
yep,
Bring them on board. Expand your value, increase your
yep,
value by expanding your network, right?
correct.
One of my earliest partner, she's in real estate. She's amazing lady, and she says your network is your
Is your
net
net
worth,
worth? Yeah,
right? And I said that makes sense, yeah, because I built the whole entire network already. I just never leveraged it.
yeah,
Now you build depth and width, right?
yep. I think also for the CPAs and the fractionals, when we're speaking to the brokers, you need to be developing those relationships with the CPAs and the fractional CFOs. I mean, in fact, that's how I got to know you, is because I already had partnered with my CPA fractional CFO. We were helping Canadian business owners to, acquire properties, put it into their holding companies, doing all that structuring. But instead of just handing it off to the credit unions or the bank and the internal departments of the commercial financing side, we basically took it upon ourselves. We developed the skills. That's how I reached out to Sua in the first place, and that's how we added an extra stream of income, or we have more control to help our
Yeah.
clients succeed. So if you're a fractional CFO or CPA, this is something that you should got to pay attention to. And of course, business owners. I've always been an entrepreneur, business owner, right? So from a business owner standpoint, right? Why is it important for them also to know about, they're potentially the ones that need to borrow the money, but why is it important for them to understand commercial financing?
I mean, we are interconnected from business owner,
Mm-hmm.
investors, CPAs, and,
Yep.
and even the other brokers that I've come across. Because here's the thing,
Yep.
you always have a business owner as a residential marketer, just that you've been sending to the bank and have
Yep.
lose control that you mentioned earlier. Right? You have no control of the conversation. You know what they're saying. You
Yep.
don't know if they're saying good or bad thing about you, right?
Yep.
And then on the other side, it's like you only go to the tax guys once a year, and you're not fully leveraging them. You're paying for their service, but you have no idea how much more wealth they can help you build if you had
Correct.
enlisted them, elicit their higher value services, such as, hey, how do I build a portfolio so I can pass it to my next family? How can I set up family trust so I don't have to pay the capital gains when I'm dead, right?
Right. Yeah,
All of
exactly.
these
Section
things,
85 election, right, in
yeah,
Canada,
yeah, all of
so that you
these,
can
all of these
transfer
things,
that. Yep.
they're saying, well, I'm dead, I won't have to worry about. Yeah, but your children's going to be like giving the government half of the money that you built. Why would you want to do that?
Yeah.
Right? So
Yep.
a lot of these things that business owners don't have time to understand that. CPA knows it.
Yep.
They just never been elicited to help, right? To be advised. So pay them more. They'll help you make a lot more. Business
Yep.
owners don't have time. They need guys like us. They need, when you send them to the bank, what the bank says, book 9 to 5.
Yeah.
The business owners again, I work 9 to 5 for crying out loud. I don't have
Yeah.
time to go to the bank, right? So they need people like us who work all hours. I'm sure you guys work 7 days a week, some of you, right?
Yeah.
Or residential mortgage broker
So
and
many
even
business
CPA.
owners don't
Yeah.
understand that their primary residence could be in their corporate treasury, in their holding company. They
Oh,
don't
big
understand that
time.
they are
Yeah.
leasing the property that they operate their business when they could be owning it. That also could be held in the
Yep.
holding company. You can
Yep.
service it. You can actually get a lot of
Uh,
just the capital.
there's so many ways to skin a cat per se, as I say it.
Yeah.
It's like as a business owner, you can leverage multiple things to increase your working capital so that you can hire more, so that you can go on and get contracts. You can extend to get more contracts,
Yeah.
bigger jobs, right?
Marketing, you can acquire your competitor. You can do all kinds of
Big
things.
time. Oh,
Equipment.
big time. You can
Yeah.
acquire bigger business than yourself. You can acquire
Correct.
the bigger whale.
Yeah.
I've seen that happen,
Yep.
right? And investors, hey, we are always looking for a better deal, for high interest,
Yep.
higher return of our money. Connect with the business owner, connect with the CPA, connect with the mortgage broker. All of us combine forces, go win, win, win.
Yep. Yeah, rather than
There's
being
money to be
pigeonholed
made.
only on residential,
Yeah,
right? That's we're not saying
exactly.
that residential is bad, but if you only have residential, then your options are limited. Versus in the commercial side, there's so much more creativity, which Stu actually puts in the white paper. He talks about,
Yeah, the
you
white
know,
paper. I mentioned a lot of different sections about the benefits, the pros and
mhm,
the cons of
yeah,
just being a one. It's like jack of all trade, a master of none, but better than one.
yeah.
Right? If you only do one thing, residential, you're losing out on nine of the other stuff that we talk about in commercial
Yeah.
financing. There's so many different niche. There's so much to do that nobody even knows about it.
So
I finance everything, right?
should I show them? Should I
Think
show
about
them what
that.
the? Should I give them
Yeah,
a
yeah,
sneak
yeah. You
peek of the
should. You
white?
should. You should.
You
Yeah, you
sure?
should. You should. You should.
Okay, okay.
Yeah. Let me see.
Let me see. I'll pull. I'll
So,
pull up.
I mean,
Okay.
just the last message. So the
Yes,
last message is why I want to show you is this. You have a choice whether you're on the side of the good news or the bad news.
that's true.
For me, I'm straddling both sides. I'm thinking I can finance residential property on the commercial side, and I have graduates, 300 plus graduates. If they need strictly residential, like townhouses or condominium, I refer that off to the residential mortgage broker,
Yeah,
right? So the message is like, don't quit, but consider adding this to your quiver, arrow, right? Whole
yeah.
bunch of arrows to shoot with, rather than just jumping on one leg. Yeah, so share what the gift that we have for them, and then
Okay.
they can also see.
Yeah, so I'm just gonna guys, I'm gonna thumb through this, right? So you guys can read it on your own time. There will be a link in below this video, right? So you guys can get it, or somewhere around this article if you're watching a video on another platform here. But there's a lot covered in here, and Sua breaks down and the different things, what was said by Kevin Warsh and by Tiff and stuff like that. And but he also then takes it and applies it to how you can use this now. Okay. So go through this, give us your feedback, let us know your thoughts. Make sure you pick up the white paper, make sure you read through it, and then come and either meet Sua at one of his live events, and then he's going to coach you on how you can take this information rather than be it fear. Learn how
Yeah,
you, like you said, can have extra quivers in your or arrows in your quiver, so that when
arrows and quiver.
times
Yeah.
change, you can be that creative who knows how to who knows how to create the narrative so that the lenders want to lend, not just be stuck with just residential, right? So if you guys got value from this video, let us know, subscribe, and we'll see you guys in the next video. Thank you, Sua.